Good morning, everyone. Welcome to the European Crossover webinar. You can see here that the market final PMI came in at 45.9. Reuters poll was 45.7. We do have, or we have had data throughout the morning with Spanish manufacturing PMI coming in a bit strong at 46.8, with the Italian manufacturing PMI at 47.7, just a hair stronger, and as well as French PMI, just a bit stronger also. Did have German PMI coming in at 42.1, a surprise in the sense that it's a bit stronger. All we've had is just weak German data all along. At the bottom of the hour, we will get the market PMI out of the UK number and also European Centex index. Those are at the bottom of the hour. Then as we roll into the States, we'll have ISM, and that's going to be at 9:45 Eastern. Obviously, these times are central for me here, but it'll be 9:45 Eastern, and then employment trends at 10 a.m., durable goods also at 10 a.m., factory orders. And we'll move this out of the way. And be just a moment. Okay, you can see the euro is, we're still near the upper regions, although we had dipped a little bit, but somewhat quiet start to the week in FX. Cable just down just a bit, not much, not too far away from that big pivot above 2980 here. Peso continues to remain weak. We're actually, I think this is our interim support for today, actually 1906. And dollar yen's working a little bit higher. And looking at the cross rates. A little bit stronger here with the Kiwi yen. And the Bund has begun to slide back, and that would actually be beneficial for Euro bulls in the sense that we should be supported for price for the euro. Get a little extra boost. Crude oil making a push back towards Friday's highs. And gold relatively quiet. That we're going to move into the news. November surge. November is being kind to the world market so far, with Wall Street's S&P 500 storming to new records and the all-country index of world stocks clocking up its best levels since February of last year. The VIX gauge of the U.S. fear gauge of the U.S. stock market volatility is at its most subdued level since July. And the dollar, whose persistent strength has been another source of tension on world markets over the past 18 months or so, is easing back gradually. The dollar index against the world's most traded currencies fell to its lowest level in almost 3 months on Friday and remains on the back foot first thing this week. While the emerging market currency index hit its best levels since July, the improvement of the global markets picture has been less of a sudden epiphany than a gradual turn in the underlying economic and political sagas that have been dragging on both hard data and sentiment all year. Without any real specifics, the U.S. and China officials have once again convinced everyone they need to agree to this later this month on the so-called phase one of a bilateral trade deal to end a year of tariff wars between the world's two largest economies. China's foreign ministry said on Monday that Presidents Xi Jinping and Trump have been in touch all through the recent trade hiatus via various means, both Washington insisting on planned tariffs hikes on Chinese goods scheduled for December are still on the table, and no indication that previous tariffs rise will be rolled back. The market optimism is still based on a good deal of faith and warm words. The other source of relief for investors is that the U.S. and global economic data appears to have stopped deteriorating, or at least lifting for now fears of an emerging recession over the horizon. Friday's above forecast U.S. jobs report still paints a picture of a slowing economy, but one that's confounding the worst feels so far, even as the Federal Reserve delivered its delivered its third interest rate cut of the year last week. Significantly, U.S. corporate earnings are for the third quarter in a row defying consensus expectations for an annual aggregate contraction in Q3, with 3/4 of firms having reported for Q3. The aggregate is showing a modest profit rise of 0.2 against a preseason forecast for a shrinkage of more than 3%. U.S. economic surprise indices remain in positive territory despite a retreat from recent highs in the overall surprise index for the G10. Most industrialized economies. The U.S. yield curve between 3-month and 10 years, a key bellwether of the U.S. recession, when inverted, is climbing yet higher again, having been negative for much of the time since May. Even with the Tokyo markets closed on Monday, the rest of Asia bourses matched with Wall Street's rally from Friday. Shanghai was up 0.9. U.S. stock index futures hit their highest since early January, and the DAX futures hit their highest since June 2018. In emerging markets, the South African rand surged 1.5% after Moody's on Friday kept the country's sovereign credit rating. And the euro dips before Lagarde speaks, but hopes for tariffs reprieve lend support. The euro edged down on Monday as investors awaited Christine Lagarde's first speech on the European Central Bank president, but hopes that the U.S. may choose not to impose tariffs on auto imports kept it near its highest levels. Lagarde gives her first speech on Monday as ECB chief, and markets are assuming she will stick with the ease policy script under her predecessor, Draghi. Commerce Secretary Wilbur Ross said in an interview published on Sunday that Washington may not need to impose tariffs on imported vehicles later this month, after holding good conversations with automakers in the European Union, Japan, and Korea. Tariffs have already been delayed over 6 months. It could be a cloud over German manufacturing, could help to lift sentiment in the euro area. Boom, 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 nothing else. Okay, let's move on to the analysis. So this is the euro is nicely recovered from the past week's test with the 38 test of the 38% pullback, closing above 1150. There we go. The next key level is 1213 with the potential to 1252. Support is 1118. I don't see my bear with me. Bias chart. So the next key level, as I mentioned, is going to be 1213 with potential to 1252. You can see the 1213. We support 1118. And for immediate resistance, before we get to 1213. It's going to be right there at 1193. Might even give it just a hair there, right? 1197. 1197. Okay, and with cable, cable re-challenged the 2980 pivot, but was unable to close the week above that level. Resistance will remain the pivot. A daily close above 2980 will open the door for 3208 right here. Support is now 2863, followed by 2743. So bear with me one moment. So right now it says 2980. Once we get past, if we do go on to get past that, now on the daily close, it would open the door up here for 3208. Immediate resistance would be 3050 if we can get past here. So we're going to put both of those here for right now. If we do blast past that. For right now it says 2980. So hang on. And support is 2863. We're still bumping up against this pivot right here. A huge pivot. We've been talking about that actually before we got there. And you can see how well that has kept this market in check. And really just going by the body touches and touches across here, you can see how important that's been. If we get past here, we should be able to blow those stops and probably just gently hit some stops above 30.50. We could even punch in a little bit higher, maybe up to this. Probably really spooked the market and jump into the 30.80s. But if we get past this, a daily close above 29.80, like I said, is going to open the door for a test of 32.08. Let's go and move into the Aussie dollar. Aussie finished the week. Finished the prior week at new highs. The pair should find resistance at 69.72 once it takes stops out at 69.44. So I think there's a good possibility we'll do just that. We're not even that far away from it at this point. Upside stretch is 70.27. The support is 68.54. So we're not very far from 69.44. I actually thought we might even punch beyond that. We're at what, 26, so 18 pips away. We're actually going to, like I said, put the resistance here at 69.72 for today. And support here is going to be 68.54. The Q has rallied the last 4 sessions, but has been unable to secure a close above here. 64.36. The momentum is in its favor in the medium term, so resistance will be 65 even with support at 63.58. So we haven't been able to get a close above 64.36, although certainly we're above that now and trying to press a little bit higher. Let's see if we can do just that. But believing that the momentum is already in its favor, you can see this. We're actually going with 65 even. Actually, we've got it right here. It comes in at 64.93. We're thinking we could get past that. So we'll just go with the 64.93 with this level here. Big figure, main figure is the 65 for now. We'll see if we can. We still may see a little bit of a pause before we get there. So let's go with 65. 64 positive, 64.93, which is already in place. And then support will be 63.58. Let's go move into the dollar CAD. So the dollar CAD has been turned back from a second challenge of the 50% retracement. You can see that on Friday. And here's that 50% retracement. The pair has a potential to fall back to 30.93. Resistance is now 31.82. So potentially, like I said, we can get back down here to 30.93. We'll see if we can see anything immediate before then. Comes in right there at 31.22. And resistance is going to be 31.82. We do have Canadian employment at the end of the week. Also, Blake's week ahead video, he referenced that, and also the USMCA, which might get done. Both could be factors in strengthening of the Canadian currency, which obviously would open the door for us to fall back. Like I've said, we have potential to come back to 30.93, but like I said, if we break this area, we could really see a big fall. And we did get turned away pretty strongly at that 50%. Another chance Friday, and we jumped up and came up short. We actually had our bias chart resistance at 31.96, and that's exactly what we came up short at. And then we saw this market turn back down. Let's go on and now move into the peso. The dollar peso has thrice been turned away from the breakout level of 1923. This thing is traded perfectly from a technical standpoint. If you talk about this, we dogged it about how it failed, and if it closed, we would move down to 08, and then eventually we had 02. It bounced off the 02, and then we said, for Friday, the key was going to be this 1923.6. I thought we might even be able to hit some stops above it, although I didn't think it would last too long out of it, but nonetheless, it failed again there. So dollar peso has been thrice turned away from the breakout level of 1923.6, closing below 1912. The failed move now suggests a test of 1892. Resistance is 1920 with initial support at 1906. We're just a bit below that right now. And you can see if we look right there with that touch, that's 1904.6. So, which is the body touch. So we're actually below 1906. So we'll just put it 1904.6 because that's the body touch right there. Right there. You see that? 1904.6. So we'll put that for today's bias chart support. We even thought we'd even take out, at least on some stops, 23.6. It couldn't even do that. Resistance, we did put for 20. Resistance will be that older resistance. I don't think it's going to get beyond that, which was 1916. That might even be a bit rich, but we'll still go with that 1916 if they try and get a little bit of a bounce. Doesn't appear they will. And let's go on to the dollar yen. So the dollar yen is paired back 125 pips from the 927 pivot. The value support comes in at 750 with resistance at 856. Well, there's that pivot we talked about going into FOMC and BOJ, and certainly we came in there and I think we even took it out by 1 pip, and then we turned around and rolled over and set up a nice gravestone doji here and saw this thing really come apart and follow through. So certainly it's the bias is now bearish after that break, and resistance is going to be 856. We did put it for 750 overall, but you can see here we're pulling back. So on a very short-term basis, it'll be this level here, 778. We've had that before. Let's move that up. Onto the dollar index. The dollar index finished the week on the lows. Immediate target is 96.50 with minor support at 96.92 and resistance is 97.48. And you can see here, we're flirting here with this trend line, but like I said, we've got some short-term resistance at, or minor resistance, we call it 96.92, but we're looking for a target here of 96.50. That going to move into the cross rates. So the Kiwi yen remains stuck in the mud at the 69.50 level. The bias remains bullish, but the immediate resistance is 69.80. With support is 69.03. Well, we're actually above the 69.80s. You can see here that's the 50%, which we've been turned away twice. But we're actually trying to push beyond that right now. We'll just go with this little level right there, which is a bit of a stretch, which is 70.07. We'll see if they can't tag that. Actually, it comes in right there. Yeah, 70.07. So we're going to go with this 70.07 since we're pushing above that. Maybe we can trigger some stops, and that's probably going to have some trouble. 70.07, still bullish nonetheless. And we said support is 69.03. Well, we're actually holding up fairly well here. Support's going to come in right there with all these little touches, which is going to be 69.20. With that, we're going to move into the euro yen. We do have some data coming up here at the bottom of the hour, so let's just move into that. So, construction PMI here. And we'll also have Eurozone Centex Index. See the cable right here. Euro here at 1160. And we're about 30 seconds away. So might as well just keep that on the screen. Ten seconds. You know, 44.2 and Centex Index minus 4.5, an improvement there. No change though in the euro of any consequence. And cable relatively quiet. So once again, construction PMI for UK comes in at 44.2. Reuters poll was for 44, does a little bit better. European Centex Index, Reuters poll was for negative 13.8. The previous was negative 16.8. We came in at minus 4.5. So an improvement, but not any real change here in the euro or the cable here. So moving back here into the euro yen. The euro yen is marking time in a 100 pip trading range of 2050 to 2150. Support and a break lower would be 2019 with resistance at 2172, which is at 50% of that range of 1501 to 2752. We're just sitting here. We're dead in the water right now. So very, very, very tight range right now. We're going to go with the immediate level right here, which is 2135. And support across these touches, which is 2039. On the euro is holding the trend line after a down week. A key support is going to be 60.95. You can see that key level coming across here, all the way across 60.95. As pair may test stops into the beginning of the week. Resistance is 62.15. So we're sitting here rather quietly. We do have some Aussie data today. So let's go with that 61.95 on the downside. What was the resistance here? 62.15. You see this bar can run across here. Let's call that right there. 60. Just call it 62.11. And let's go and move into the Euro Kiwi. Now the Euro Kiwi held the 73.09 level. You can see it right here. But remains bearish after the failed upside breakout. Immediate resistance is 74.12 with support, which is the 73.09. You can see we've already challenged it again this morning here. And you can see the significance of the 73.09 here. So we've already dipped below the chest and stops. We're still holding above it for now. We'll keep it for support, but they were trying to go through the stops already. I'm looking for upside. Would be right there, 73.68. go into the Aussie. The Aussie closed at a new weekly high over the last 2 months. The pair was turned away at resistance of 75.31. You can see what we tagged that area. A moment. Two consecutive closes above this level will allow a challenge to 76.19. See that right here. Put that in some context. The importance of 76.19. Support is now 74.02. So we're kind of stuck in the middle of this range here. We do have the Aussie data, so we're going to, at least for now, we'll stick with the 74.02 and resistance of 75.31. Give it some room. So a moment. Now let's go move into the guppy. The guppy is forming a small triangle on the daily, closing at the 140 level. We're right there right now. A break above will find sellers at 42.15. Support comes in at 38.20, followed by 37.36. Well, if we break here, we're going to try and challenge that 41.82. And my thoughts is if we come up, we'll come right into here. You see there? Right, that would be the 42.15. All right, coming in right there. Actually, could even go a little bit higher than that. But if we do pop this we're going to run up to is 41.82. The thing that's a little bit tricky is if we get past this and we're coming to this very, very tight area, for immediate resistance, we're going to go right there with 40.78, which we had the 40.77 right there. And support, we're going to go with this 39.27 and keep that. And we'll finish up with sterling odd. Okay, sterling odd is retraced following the failure of 190. Support level is 86.57, held on the first go round, but expecting a challenge that should send the pair to 84.89. Confluence with 85.11 to 38%. Resistance is 88.46. Well, we're pretty much in a very, very tight range here. You can see here the 88.46, but we do have the Aussie data today, so we're going to go with that. 88.46 on the upside. And the downside, I'm just going to mark it right there, 86.06. I'm going to give it some room because of this Aussie data coming out. And there's the bias chart for today. We'll go and take a look at here the indices. We are seeing crude oil make a break in here, pushing up towards these highs. Do have some resistance here at 56.40. We made a little bit of a run up there. Right, coming in right there, 35. We actually just challenged it right now. On the futures, where we did get up as high as 56.40. We're right up here. If we can get past that. And gold's staying relatively quiet. Indexes, all-time highs again, no changes. As I mentioned, the bunds continue to go and push lower here. That will be supportive for euro prices right now. And but watch this crude oil, see if we can push beyond that. But we do have some resistance coming in. On the futures, it's 56.40. We're currently now at 56.33, 56.34. And crude trying to make a little bit of a march here. If they can push higher up here, we'd have some decent resistance coming in at 56.62 if they can push beyond that. Gold, as I said, relatively quiet, and indices all-time highs. So that's what we have for today. We'll see you on the FX Daily Roundup in the chat room. Thanks for joining us. Have a good day trading.